Emirates Airline today announced 3 new weekly flights between Dubai and Cairo, commencing on the 1st of January 2016. The new service will supplement the current twice-daily Boeing 777-300ER flights, taking the total number of flights serving Cairo to 17 each week. The additional flights will boost the number of connection options that Emirates Airline offers to passengers heading into or from Egypt's capital city to destinations in the Middle East, Asia and the Americas. Apart from the increased passenger capacity, the extra frequencies will allow Emirates Sky Cargo to carry an additional 17 tons of cargo per trip, including perishables, automotive spare parts, pharmaceutical products, personal effects and electronics. Additionally, Emirates will also start flying to 2 new cities in China as the Dubai carrier taps rising demand for travel into the world's most populous country. From May next year, Emirates will start flying 4 times a week to Yinshuan and Zhengzhou. The airline already flies to Beijing, Shanghai and Guangzhou on the mainland. Emirates will operate Boeing 777-200LRs to the destinations. The aircraft has a 3-class configuration with 266 seats and 14 tons of cargo capacity. Popular commodities are expected to be transported from these cities, including electronics such as mobile phones from Zhengzhou and agricultural goods including goji berries and cashmere from Yinshuan. Hinting at positive growth rates for the real estate markets in the GCC, Masah Capital published its report announcing a booming GCC economy at $1.65 trillion in 2014 compared to $535.7 billion a decade ago. According to a local daily, the reports were in comparison with global real estate market investments, which fell back in 2014 due to policy changes in China and other Asia-Pacific countries, leading to a weakening inland sales. Global real estate investments fell in 2014 for the first time in 5 years, dropping 6.3% to $1.21 trillion from $1.29 trillion in 2013. While the recent drop in oil prices have subdued GDP growth in the short term, the GCC economy is expected to recover on the back of supportive economic policies and strong performance in the non-oil sector. According to International Monetary Fund, the GCC's economy is estimated to reach $2 trillion by 2020, with Saudi Arabia contributing $902 billion, followed by the UAE, Qatar, Kuwait, Oman and Bahrain. Masah has also observed that the GCC region as a whole is still heavily reliant on oil revenues, while the non-oil sector comprising of manufacturing, real estate, tourism, hospitality and trade has emerged as the major growth engine, especially in the UAE. Consequently, despite the steep decline in oil prices, GDP growth in GCC was not severely affected due to strong performance of the non-oil sector and large cash buffers, which ensured steady levels of spending and investment. Dubai Investment Development Agency and Dubai Exports recently hosted a business delegation from Poland and presented to them the competitive advantages of doing business in Dubai and the Emirates' vision to be the preferred investment destination globally. Fahad Al-Gargawi, Chief Executive Office of the Dubai FDI, explained at the Dubai-Poland Business Forum held in partnership with the Embassy of Poland in the UAE that in addition to its traditional strengths in trade and logistics, Dubai has acquired diverse competencies in retail, tourism, healthcare, education, information technology and green technologies, aligning them with an innovative strategy to create, retain and grow investments from all over the world. He urged businesses from Poland to leverage the growing relations between their country and the UAE to expand their market coverage. UAE-Poland trade grew almost threefold between 2012 and 14, from 1.8 billion dirhams to 4.7 billion dirhams. While addressing the forum, His Excellency Dr. Sebastian Stepniewski, acting mission head of Poland in the UAE, stated that the UAE accounted for almost 60% of Poland's GCC trade, adding that the UAE and Poland have many factors in common, including special economic zones and technology parks, and businesses on both sides stand to benefit from working together. And finally, Nakheel has confirmed a profit payment of 220 million dirhams on its trade creditor Sukuk. In an official statement, Nakheel said that instructions have been sent to Deutsche Bank, the registrar and paying agent for the Sukuk, to make the profit payment to all Sukuk holders on the due date of the 15th of December 2015 against the Sukuk issued amount of 4.4 billion dirhams to date.